you're listening to this, you're probably wondering, what are petty cash funds while studying for your upcoming accounting exam? Now, petty cash funds are actually the amount of cash kept on hand to pay for monetary expenditures of a business, ranging in sizes of funds. Now, the sizes can vary. They can be from $100 to thousands of dollars to tens of thousands of dollars, depending on the size, from small businesses to large multinational corporations on the international scale. Now, there are three ways to operate and use a petty cash fund. Firstly, one must establish the fund. Secondly, make payments from the fund. And thirdly, replenish the fund. So, firstly, establishing the fund. One must write a check for the amount of the fund, then cash the check and place it under the designated custodian employee. For example, James may want to pay Henry $200. He will credit $200 in petty cash and debit $200 in cash, and there is no change in total assets here. Secondly, making payments from the fund. After the fund is established, cash can be used to pay for expenses in two ways. Firstly, cash can be taken from the fund to make a payment. Secondly, employees can seek reimbursement from the fund for payments they personally made. They must always collect receipts as no journal entries are made from payments with petty cash. Thirdly, replenishing the fund. As cash in the fund decreases, the fund must be replenished. The remaining cash in the fund is counted in the company cash as a check for the amount that brings total cash in the fund balance back to the original balance, and the receipts are used as documentation for recording expenses. Now that is petty cash funds in a nutshell.